Welcome to Countouts. In this lesson, we're going to be looking at the bank reconciliation statement. What is the bank reconciliation statement? This is a statement where we reconcile what we have in our books with that in the bank statement. Whilst the business keeps a record of all its cash transactions, the bank also keeps a record of cash transactions with its customers. The bank's record is sent out to customers monthly, showing all the customers' transactions with the bank. The bank statement provides an ideal opportunity for the business to check the entries that it made in the cash journals. So in essence, what we're doing in the bank reconciliation is after every transaction, we record them in our books. And then at the end of the month, we would receive the bank statement, or during specific periods, we would receive the bank statement. That gives us an opportunity to compare what is in the bank statement with what is in our books. Now, obviously, we would expect them to be the same, but they will not be the same. And why are they not the same? We're going to look at those elements in this lesson. So in this lesson, we're going to go through some theory and also what you do with every item that you have that you need to take account of. So we're going to go through a very thorough example which will help you understand the bank reconciliation statement. And I'm confident that after this lesson, you will be able to do any bank reconciliation statement yourself. So if you gain value from this lesson, if you're going to learn something, click on the subscribe button down below, like this video and share it to those you think it might help. So let's get right into it. Here's something to remember. Since the bank keeps the cash of the business, it considers the business to be a creditor, while the business considers the bank to be a debtor. Very important to bear that in mind. The bank keeps the money of the business, so it considers the business to be its own creditor because it owes the business that money. It's keeping that money, but it doesn't belong to the bank, it belongs to the business. While the business considers the bank to be a debtor because the business looks at the bank and says the bank has our money, so it's like our debtor. As such, whenever the business receives and deposits cash, the bank account is debited, while the bank statement will show the same deposit as a credit entry. So what we are saying here is that in our books, whenever we receive money in our bank account, we'll record it on the debit side because bank is an asset and it increases on the debit side. Now, if you do not know your debits and credits and how you do journals, it's important for you to know that as you go ahead with the bank reconciliation statement. So we have done a lesson specifically on those. So you can click on the link on the top right of the screen or in the description below. But what we are saying here is that when we receive money in our bank, we debit bank because bank is an asset. But according to the bank views the business as a creditor, like we said earlier. So it will credit that amount. So the bank account is debited while the bank statement will show the same deposit as a credit entry. So when you look at the bank statement, everything that comes into the bank will be on the credit side. Everything that goes out of the bank will be on the debit side. But when you come to our books and look at our bank account in our books, everything that comes in is on the debit side and everything that goes out is on the credit side. The bank account of the business will be credited while the same payment will be shown as a debit on the bank statement. So here is how it is. In the business's books, when we have a debit, it's favorable. When we have a credit, it's unfavorable. So we're talking about bank here. And in the bank statement, when you see an amount on the debit side that's unfavorable, meaning that money is going out. When you have an amount on the credit side, that is favorable. So you can see it's opposite of what we do in our books. So that's something important that you need to remember going forward. Here are some reasons why the bank statement would be different to our bank account. The bank statement would be different to what we have in our books, hence the need for us to do the bank reconciliation statement. So here are some reasons as to why they would be different. Cash deposited by the business, especially at the end of the month, may not appear in the bank statement. So remember, you would receive the bank statement at the end of the month, and you would see that if you deposited the money on the 31st of the month, for instance, it would not appear on the bank statement because you deposited it just before the bank statement came out. So that is why that would be different from what you have in your books. When you deposit that money, you'd have recorded it in your books, but they may not appear in the bank statement because you may have deposited it late. So that's one of the reasons for the differences. An error may have been made by the bank or the business. So whenever an error is made, obviously that is why you would have different amounts on both accounts. Checks deposited by the business may have been dishonored by the bank. Checks deposited by the business may have been dishonored by the bank. So if a business receives a check, maybe from a customer, would record that on the debit side in our books to say we've received this amount from a customer. Now later on, when we go to the bank and try to deposit the check, the bank may dishonor the check for whatever reason, maybe insufficient funds or whatever the case may be. So there is another reason for differences between the two accounts. Bank charges levied by the bank. Remember, we'll only know what our bank charges are when we receive the bank statement, so they would not appear in our books. So that is why the amounts will not be the same. Interest may have been charged on the overdrawn balance, or interest may be earned on a favorable balance. So again, the interest earned or charged will appear in the bank statement, but we'll need to receive the bank statement first for us to record it in our books. Stop order or debit order payments may have been made by the bank. So when a debit order goes off in our bank, we'll see it in our bank statement, and only then will we record it in our books. Deposits may have been made directly into the bank account. So a customer may have paid directly into the bank account. So until we receive the bank statement, we will not have seen it. So we will only record it after the bank statement has been received. That is another reason for the differences. So now that we know the reasons for the differences, here's how you account for these reasons. And here is how you specifically going to do it when you are doing a bank reconciliation questions. So here we are reconciling the bank balance in the ledger with the balance in the bank statement. We do it in the bank reconciliation statement. And how do we do it? There are two main procedures involved in bank reconciliation. They are: the cash journals of the business must be updated after the bank statement is received. So we look at the bank statement, compare it to our cash journals as well as previous month's bank reconciliation statement, and we shall see when we go through this example. So you compare that and update our cash journals after we receive the bank statement. Transactions that the bank needs to attend to are recorded in the bank reconciliation statement. So whatever needs to be recorded in the bank statement, or whatever is missing in the bank statement, or whatever error may have been made in the bank statement, will be updated in the bank reconciliation statement. But whatever didn't appear in our books but appeared in the bank statement will need to be recorded in our books. So items that are still outstanding from the previous month's bank reconciliation statement. What do you do with this? And I'm sure your question would have something like this, where they tell you the following items appeared in last month's bank reconciliation statement but did not appear in this month's bank statement. Remember, bank reconciliation statement, whatever we record there, we're expecting it to appear in the bank statement for the following month. But if items are still outstanding from the previous month's bank reconciliation statement, what will you do? You have to record it again in this month's bank reconciliation statement. So if you have that question where you're told the following items appear in last month's bank reconciliation statement but did not appear in this month's bank statement, you take those same amounts and record it in this month's bank reconciliation statement. So this entry, like I said, will appear again in the new bank reconciliation statement. The exceptions will be for outstanding checks from last month that are stale or have to be cancelled for various reasons. And you'll see this example when we go through our thorough example after this. Deposits that are made by the business not yet credited on the bank statement. So if you made a deposit as a business and it's not on the bank statement, what will you do? Well, this deposit must be entered in the bank reconciliation statement. So if you made a deposit but you didn't see it on the bank statement, it must be entered on the bank reconciliation statement. Checks issued by the business that did not appear in the bank statement. So you issued checks to your suppliers or to whoever you are paying, but they didn't appear in the bank statement. What might that mean? That might mean that whoever you issued the check to has not gone to the bank to cash it as yet. So that's why it will not appear in the bank statement. So what will you do? You record it in the bank reconciliation statement. These checks may not have been presented by the respective payees, like I said, to the bank for payment. They will be recorded in the bank reconciliation statement. Checks issued that must be cancelled, including stale checks. Now they may tell you in your question, and you'll see now in our example later on, that you issued a check, but that check must be cancelled, or it's stale, or it's gone over its period. Maybe the check is only valid for 3 months or 6 months and it wasn't cashed in. If it must be cancelled, what do? The cancellation entry for a check issued is made in the cash receipts journal. The entry made will be identical to the original entry in the cash payments journal. So why do you do this? If you issue a check to someone and they tell you now that check that you issued must be cancelled, the day that you issued that check, you recorded it in the cash payments journal. But now that you are cancelling it, you are recording it in the cash receipts journal to take it off your books to say, now we are cancelling this check. direct deposits made into the account of the business. So someone might have deposited directly into your business. So you may not have seen that, you may not have recorded it in your books. So what will you need to do? This deposit must be recorded in the cash receipts journal. Interest on overdraft. Now remember, interest on overdraft will appear on your bank statement. So you'll need to see it on your bank statement, then record it in your books. So the bank statement will reflect interest on overdraft if the overdraft facility has been used or utilized. On the debit side of the bank statement, that's where it will appear. The interest must be recorded in the cash payments journal. It must not be included in the bank charge with the bank charges, as it is a finance cost. So they will tell you that the following charges were levied by the bank, and they will show you all the charges, maybe credit card fees or deposit fees, together with interest on overdraft. You'll add together all the fees except the interest on overdraft, because that is a finance cost. So you do it separately as a separate line item, and you'll see it in our example just now. Bank charges, what do? Charges levied by the bank, like I said previously, shown on the debit side of the bank statement, should be added up and recorded in the cash payments journal as one entry. So you should add all of them up and add it in the cash payments journal as one entry. And like I said, don't add the interest, just add it on a separate line item. Stop orders and debit orders, well, I've already mentioned this. These are payments made regularly by a bank on behalf of a client and show on the debit side of the bank statement. These stop orders and debit orders must be recorded in the cash payments journal. Dishonored checks, well, if a check is dishonored, checks previously deposited by the business may be dishonored by the bank and will be found on the debit side of the bank statement. So whenever we want to cash in a check and the bank says this is dishonored, it will be put on the it will appear on the debit side of the bank statement. The entry for this must be made in the cash payments journal. So when a check is dishonored, you put it on the cash payments journal. A check that you try to deposit in the bank, that is, then you'll put it on the cash payments journal. Errors that is made by the business. Remember, when errors are made by the business, it does not affect the bank statement. So errors made by the business in the cash journals must be corrected in the cash journals. The most common type of error is made when an incorrect amount is reflected in the cash payments journal for a check issued. So whenever they say you've made these errors in your books, you correct it in your books. You don't touch the bank reconciliation statement because it does not affect the bank. If the amount recorded in the cash payments journal is more than it should be, then a corrective entry for the difference between the two amounts is made in the cash receipts journal. If the amount recorded in the cash payments journal is less than it should be, then a corrective entry for the differences between the two amounts is made in the cash payments journal. Errors made by the bank. Remember, if errors are made by the bank, the error should be corrected in the bank reconciliation statement. So errors made by the bank will be corrected by the bank in the next bank statement. However, errors made by the bank are recorded in the bank reconciliation statement, just like I mentioned. And these are the theories of how you complete the bank reconciliation statement. So I've mentioned why we would need to complete the bank reconciliation statement, what are some of the reasons for the differences, and how you account for some of these information that you may be given or you will be given when you have to complete a bank reconciliation statement. So what we're going to do now is we're going to go through a thorough example in showing you exactly how you do the bank reconciliation statement. So we will first update our cash payments journal, our cash receipts journal. We'll also be required to do the bank account general ledger, or the T account for the bank. That will help us get the balance that we need to put in the bank reconciliation statement, and you'll see just how we do this right now. So here we have the question for the bank reconciliation. What it requires us to do is to complete the cash receipts journal and cash payment journal for Rotich Furnishers for October 2019 after taking the information provided into account. We also asked to post to the bank account in the general ledger of Rotich Furnishers and to balance the account and to prepare the bank reconciliation statement as at the 1st of October 2019. So we're given information down here. So obviously you can see this is in Word document, but my solution is going to be in Excel, as you can see here. I've already drawn up the tables just to reduce the amount of time we'll take on this lesson. And we are just going to rush through it. So you can see my cash receipts, cash payments, the bank account, the T account I've already drawn up, and the bank reconciliation statement and how it looks as at. So that date is supposed to be 31st of October 2019, because that's the date at which we asked to do the bank reconciliation statement. Now let's begin with the bank reconciliation statement. Let's go through the information. Here we are told that the bank column of each of the cash journals showed the following totals before the October 2019 bank statement was received. So this is what our books showed before we received the bank statement. Cash receipts journal, 87,600. So what do we do with that? And cash payments journal of 87,890. When they asked us to complete the cash payments and cash receipts journal, so we start with that one. The first thing that you do is that you go to your cash payments journal and cash receipts journal and plug in this amount. So for cash receipts journal, we have 87,600. So we go to our cash receipts journal and we put their total. And obviously that's the amount which is brought forward. So brought forward, and obviously this column would be for folio. And then we put in the amount. How much was it? It was 87,600. So we put in the 87,600. And then, okay, so here, as you can see, the total here is going to be the sum of all of them that I'll put down. As you can see, I've already put the formula there. And then the cash payments journal, we have 87,890. So we again write total. This is a folio. Okay, this is the brought forward. We have 87,890. So we put 87,890. So this is the first thing that you do when you're asked to complete the cash payments journal and cash receipts journal. You start taking the information and plugging them in like this. So this was the balances before we received the bank statement for the month. And then we continue. We're told that the comparison of the cash journals of Rotich Furnishers for October 2019 and the bank reconciliation statement for September 2019 with the bank statement from Equity Bank for October 2019 revealed the following differences. Very important to pay attention to the details. Now here, especially this one's here in bold, where they say entries that appear on the bank statement but not in the cash journals. So here you can see these amounts appear in the bank statement but did not appear in our books, in our cash journals. So what do? Well, you don't touch the bank reconciliation statement because they already appear in the bank statement. So we only go to our books. So wherever these amounts didn't appear, we do we go to that account and do it there. So if it didn't appear in our books or in the cash journals, we go to our cash journals and do it there. Later on, if they tell us these amounts didn't appear in the bank statement, then we go to the bank reconciliation statement and do it there. So here they told us it didn't appear in the cash journal, so we'll do it there. What didn't appear in the cash journals? Well, we are told here a check previously received from the lessee for rent was dishonored because of insufficient funds. What does this mean? Someone who we rented out the premises to brought a check and gave it to us paying for his rent. But when we went to the bank to try and cash it in, we saw that the check was dishonored because of insufficient funds. Now remember, the date we received it, we recorded it in our cash receipts journal and we put the amount 1,570. Now that we've learned that the check has been dishonored, we have to remove it from our cash receipts journal. How do we do that? We put it in our cash payments journal. So we go to our cash payments journal and put it there. So we're going to put cash payments journal. So here you can put anything. You can put dishonored check, or you can put check from lessee. So I'm just going to write there debtors control, because he now owes us money. That check was dishonored, and I'm going to write here check which was dishonored. So I'll write check RD, and then I put in the amount there 1,570. So you can see here we had initially recorded it in our cash receipts journal when we received it, but now that it's been dishonored, we have to take it out of our cash receipts journal. How do we do that? We put it in our cash payments journal. And then next one, a debit order in favor of Telkom for the personal telephone account of the proprietor. So here we have incurred an expense here of telephone, and a debit order just went straight from our bank account. So if it went, from our bank. So it went straight from our bank, and we have not recorded it in our books, as we were told here it didn't appear in the cash journal. So we have to go to our cash payments journal and record it over there. So we're going to go to our cash payments journal and put in the telephone. I'm going to put the amount of 700 there. The folio here, you don't have to put anything. You can leave it blank. You'll still be marked correctly for the amounts that you put in the right place. Next one, charges levied by Equity Bank. Now remember, we mentioned this when we went through the theory, that when you are told that charges are levied by Equity Bank, we're talking about bank charges. But we have service fees, cash deposits fee, credit card commission, and interest on overdraft. So what do? You add all of them up together and name them bank charges, except for interest on overdraft. Remember, we said that interest on overdraft we record it separately because it's a finance cost. So we add all the three together: 1,110, 40, and 370. So I'm going to write here bank charges, and then what am I going to do? I'm going to add 110 plus 40 plus 370. So let me add it here: 110 plus 40 plus 370, and it gives us 520 for bank charges. And then the interest on overdraft we record it separately. So we're going to record interest on overdraft down here. Interest on overdraft. And then we put in the amount there. It's 120 rand. Remember, these are all in the cash payments journal because they are bank charges. If they say charges levied by the bank, then you put it as bank charges and then the interest on overdraft. So it's money leaving our business. So it left our bank account, and then we have to record it in the cash payments journal. And then we move on to the next one. We are told that a deposit by Equity Bank into the account of Rotich Furnishers. Very important to remember that we are Rotich Furnishers, as we were told at the beginning, on top over there, for interest on fixed deposit. So what is interest on fixed deposit? Well, a fixed deposit is us putting money in the bank, investing it as a saving fixed deposit until a certain period when we'll receive it back. So we are being paid interest on fixed deposit. So it's a deposit by the bank into our account. Remember, all these didn't appear in our books as we're told up here. So we have to put it in our cash receipts journal for 500 rand. So I'm going to go to my cash receipts journal and write interest on fixed deposit, and then I put in the 500 rand. And then the next one, a deposit by a tenant Chesun debt into the account of Rotich Furnishers for rent. So we're going to call it rent income. And then how much was that? That was 900 rand. So I'm going to put 900 rand. Then we move on to the next one. Now you can see there we have done everything that was not in our cash journals. Now here, that's why I said it's very important to pay attention to the details, because here now they're telling us in the cash journals, meaning in our books, that did not appear in the bank statement. So if they did not appear in the bank statement, where do we record it? Well, if you guessed bank reconciliation statement, you'd be correct. So whatever didn't appear in the bank statement, we do it in the bank reconciliation statement. But now let's begin with our bank reconciliation statement. What is the first line item we do in the bank reconciliation statement? Just like the cash receipts journal and cash payments journal, we put the balance brought forward, as you can see these two amounts here. So that's the same thing we do in the bank reconciliation statement. So let me quickly go to the bank reconciliation statement. I'm going to call it here. So let's go at traditional information. You have to look for the amount which was in the bank statement. So we are told here that the bank statement showed a debit balance of 9,290 on the 31st of October 2019. So if it's a debit balance, it means we're on bank overdraft, obviously, because the bank records us in the opposite way that we record ourselves. So this one's a debit balance, which means it's negative. So the bank statement showed a debit balance of 9,290. So you look for that one and you start with that one in the bank reconciliation statement. Since it's a debit balance, we're going to write there debit balance as per bank statement. Now that we have that, and it's on the debit side, obviously, because that's what we were told, we write down 9,290. Okay. And then, in fact, let me highlight this one so that I remember that I'm done with that one. And then now we go to the journals that we are told this one didn't appear in the bank statement. So we continue here. Entries in the cash journals that did not appear in the bank statement. What didn't appear in the bank statement? A deposit made on the 31st of October 2019. Remember, I mentioned this earlier on, when we went through the theory, to say that you may have made a deposit at the end of the month which will not appear in the bank statement. So now what do? We record it in the bank reconciliation statement. So remember, when we deposit money to the bank, where would it appear in the bank statement? It would appear on the credit side. So we write down here, wherever side it appears for all the items, you write start with that word, credit or debit. So here it's a credit outstanding deposit, because it didn't appear in our bank statement. As you can see here, entries in the cash journals that did not appear in the bank statement. We have 25,600. So I'm going to write down 25,600. Next, the following check issued during October 2019. So these checks did not appear in the bank statement. We are still there. So we are told that these checks didn't appear in the bank statement. So why wouldn't, and what's the possible reason? We mentioned it in our theory, that maybe the people we paid with these checks didn't cash in the checks. So where would the checks appear? They would appear on the debit side, because according to the bank statement, it's the opposite of our account. So we put the negatives on the debit side. So we're going to write here debit outstanding checks. And then now that we've written that, now let's write the numbers down. Number 750, 750. So these are the check numbers, by the way. And then how much was it? 3,170 on the debit side. That's why I wrote debit outstanding checks. In fact, let me move that. Okay, let me move that to the right. Yes, let me put it there. So it's 3,170, 3,170, and then write down check number 755. So check number 755, put in the amount there, 1,040. So 1040. And then we're done with this one, entries in the cash journals that did not appear in the bank statement. Now, very important, pay attention here. These are, we are told here, additional information. So in this additional information, we don't know where they didn't appear. We are not told it didn't appear in our books, or we are not told it didn't appear in the bank statement. So you have to pay very careful attention to how you account for these ones. You have to know where it's supposed to go. So let's go through each one and see. We're told check number 690, dated 23 September 2019, being last month because we are doing for October 2019, which appeared in the bank reconciliation statement for September 2019, did not appear in the bank statement for October 2019. Now, I explained this when we went through the theory earlier on. That's why it's very important for you to have understood the theory, to say if it appeared in the bank reconciliation statement for last month, which we are told here it's for September, which is last month, and did not appear in the bank statement for this month, October, what do? We put it in the bank reconciliation statement for this month again. So you are putting in the bank reconciliation statement again. So we continue and write that check number 690. So I'm going to put check number 690. Now remember, it didn't appear and it's a check that we paid out. So we write down there 3,000 for this one here. So it's very important for you to note that if they told you that it appeared in last month's bank reconciliation statement, but not in this month's bank statement, put it in the bank statement again. Next, we're told check number 685 issued to West Pokot Chess Club during August 2019 as a donation must be cancelled as the club no longer exists. Now think about it. We're told that a check which was issued to West Pokot Chess Club as a donation must be cancelled as the club no longer exists. Why would you cancel a check? Well, it means the check was not cashed in at all. Because if it was cashed in, there was no point of cancelling it. But since we are cancelling it, we know it was not cashed in. But remember, when we gave it in as a donation, where did we record it? When you issue a check to someone, we issued it as a donation. Where would we have recorded it? We recorded it in our books that we gave out a check for 1,200. Only if it was cashed in, it should have appeared in the bank statement. But since we are told it must be cancelled, that means it was not cashed in. So we don't have to touch the bank reconciliation statement. What do we have to do? We have to make the entry in our books. So initially, when we gave away the check, we recorded it in our cash payments journal. Now, to remove it, because we are cancelling it, we're putting it in our cash receipts journal, 1,200. So we go to our cash receipts journal and you put here donation. So we're just putting the details of what this amount is for, and then check cancelled, and you put in the amount there. How much was it? 1,200. So I'm going to put 1,200 over there. and we have the amount. And then what we told, the bank account in the ledger of Rotich Furnishers reflected a debit balance of 9,700. Now, the only thing that we are left to do here in our bank reconciliation statement, as you can see, we're done with all the information we're given. The only thing that we need to do now is to put, remember, we start with our bank's reconciliation statement. We always start with debit balance as per bank statement. And then the last thing that we do at the bottom here, don't forget, we put the balance as per bank account. Now, when you put the balance as per bank account, you put it in its correct side. Remember, in our bank account or in our books, we record bank on the debit side. So here as well, in the bank reconciliation statement, it's the only item where you put it in its appropriate side. By that we mean, if it's a positive, it's a debit side. If it's a negative, it's a credit side. So let me show you how we do that. We're told that the bank account in the ledger of Rotich Furnishers, so that means in our book, reflected a debit balance of 9,700. So now we have to do the T account for us to know how much our bank account should show after making those corrections. So we also asked to do the T account. So let's go ahead and do our T account. So first of all, we put the total here. So we are done with our cash receipts journal and cash payments journal. So we take this total here, cash receipts journal. In our books, it's a bank. So we record it on the debit side. And then we take the cash payments journal and record it on the credit side. So let's begin with that. Let's put our date, 31st October. So I'm just gonna put it that way. And then what is our detail over there? We're gonna call it balance brought down. And then here, what were we told? First of all, that the bank account in the ledger of Rotich Furnishers reflected a debit balance. So according to our books, we had a balance of 9,700, an amount of 9,700. So that's the first thing we do. We put that 9,700 in the bank account ledger. And then what's the next thing that we do? We put total receipts. Now we're putting the one in the cash receipts journal. So we write total receipts and you write the amount over there, 90,200. 90,200. And then what else do you do? We put here the cash payments journal. So we put the total payments, and then I forgot to put the date first, so I put 31 October. And then what do we put there? 90,800. Remember, cash payments journal is money leaving our bank, and we credit money when it leaves our bank. Okay, now that we have all the three, okay, for the balance brought forward, I was supposed to put as at the first of the month, because here we can see the balance account on the 1st of October 2019. So I was supposed to put 01 October. So we have our debits and we have all our credits. So this is what you do when you're asked to do the bank account general ledger. You put the balance brought forward as you are told in additional information here. Balance account as on the 1st of October, you put that amount. And then total receipts, you take it from the cash receipts journal, which you'll have completed. And then cash payments journal, you put it on the credit side as 90,800, which you'll have completed as well. Now, obviously, if you know how to do the general ledger, if you'd like to know lessons on that, you'll find the links in the description below. You total up both sides and you see which side is the bigger side, and you put the amount for the bigger side on both sides. So you can see obviously it will be here because we have 90,000 plus 9,700. So 9,700 plus 90,000 gives us 99,900, and you take that same amount, so 99,900, and put it on the credit side as well. And then what is missing on the credit side to make it balance with the debit? We are missing, so let me write here balance carried down. This is how we do our general ledger if you didn't know, but you can check the link in the description below. You'll find a lesson on how to complete that and how to close off a general ledger. And then what do? We take this total over here minus this one here to get the balance 9,100, and then we come to the bottom here on the left hand side and write balance brought down. Now this will be the opening balance for the following month, so we put the same amount which is here on balance carried down, and there you have the balance brought down. So we know that our bank account is supposed to reflect 9,100. And remember what I said, the last thing that you do in your bank reconciliation statement, is to put in the debit or credit balance as per bank account. Well, we know it's a debit balance because the debit side is the bigger side, and you can see we have balance brought down on the debit side of 9,100. So you go here and you write debit balance as per bank account, and then you put in the amount here from the ledger that you have just completed. So you put in 9,100. Now that you have done that, your bank reconciliation statement should balance. Your debit should equal your credits. So let me add all of them together. 25,600, and we have 25,600 on the credit side. You can see our bank reconciliation statement balances. That means we did everything correctly. So remember the steps that you take when you're doing bank reconciliation statement. Pay careful attention to the details that you are given, and you should be able to complete your bank reconciliation statement correctly. Remember, you have to complete your cash receipts journal and cash payments journal, as well as the bank account in the general ledger for you to get the balance at the end of the period for our bank account, which you'll put here in the debit balance as per bank account at the end. And remember, with the bank reconciliation statement, obviously you always start with the balance as per the bank statement. If it's debit, you write debit balance as per bank statement. If it's credit, you do that, and then you end with the balance as per bank account. Bank account, what do we mean? We mean as according to our books. So you calculate it and then you put the amount there. I hope this has made sense and it was explained thoroughly. If you have any questions or any queries, please leave them in the comment section below. Otherwise, once again, if you have gained value from this lesson, please subscribe to our channel, like this video, and share it to those you think it might help. Till next time, cheers.